Yo, how we doing, guys? I hope everyone's doing well. Before we actually get into this charting session, what type of host would I be if I didn't welcome you to the new crib? I just moved in a couple days ago. I really don't have anything in here yet. My bed's actually still on the floor, so pretty frat coded right now, but we're gonna fix all of this week. Last week, I did not upload any videos. If you've ever moved before, you know the moving process it's usually a pain in the dick. It rarely ever goes smooth, so I had to deal with all of that. Monday was a bank holiday, so it just overall wasn't really a week that I was paying too much attention to the charts. But now we're moved in. I'm really excited about it. The vibes are a lot higher. The frequency is a lot higher, so should be awesome. But getting back into the routine, I didn't take a trade today, but I wanted to film a video on an issue that I see a lot and an issue that I used to have, and that is recognizing when you need to be on the offense and recognizing when you need to be more defensive in trading. Because your strategy is not always going to perform as well as it does in other times based on market conditions. A lot of people struggle recognizing market conditions. The reason I'm filming this video today is I know last week was a pretty tough week for continuation traders. A lot of traders got smoked. And then today as well wasn't that great. And if you look at the higher time frame, this is what it's looked like the past week. There has been no clear direction in where price wants to head. Think about it like this. The market is fractal, okay? The market is fractal. So if the high time frame isn't clear, how can you expect entries on the low time frame to play out clean? It doesn't make sense. So if we go to the 4-hour time frame, now it looks even worse. Like picture this as, let's say this was the 1-minute time frame. Your draw on liquidity is lower and you are looking for price to retrace into this fair value gap here and then head lower. Now, if this was the 1-minute time frame, would you take an entry here? Would you take an entry anywhere in this range here? If you're trading continuations, the answer should be no, okay? There was no clear displacement. The retracement was literally stronger than the displacement out of this fair value gap, and after that, we just kind of chopped around, had weak candles, and it wasn't clear on where price was going. And so if we don't know where price is gonna go in this high time frame, if we go down to the 5-minute and the 15-minute and the 1-minute, we can't really expect that to play out very clearly. And what a lot of people will do is they know that the conditions are not 100% in their favor, but they can't go a week without taking a trade because they think they're analyzing the charts incorrectly. They're not seeing something. They're being too picky, when in reality, these are the times when you need to take a step back, let the market do its thing, because eventually, bad conditions, they don't last forever. Like everyone thinks, oh, it's gonna be so long until an A+ model presents itself again. I need to press the button. And then they'll blow their accounts, and 2-3 days later, an A+ setup will come, and then they don't have capital to risk. And and you have been through that cycle. If you've been trading for long enough, you have been there. It's a shitty position to be in. Everyone's been through it, okay? But like when I'm looking for good market conditions, like when I am recognizing whether I should be more offensive versus defensive, I am looking for, we'll go to the 1 hour. Here, I don't know what my high time frame draw on liquidity is. I have no idea if we want to go and take out these highs or if we want to take out this low. I don't know because we're not expanding in either direction. Now, if I were to look at price here, I know that, okay, price is going to be more bearish in this leg because we are actually making a continuous move down. It's in the name. If you trade continuations, you are looking for continuous price action. Here, we are continuing lower. Here, we are continuing sideways. I have no fucking idea where price wants to go. To find some more here, you probably want to avoid this price action. This price action here, this leg up, you probably want to take advantage of that. And that's the key, is just being able to zoom out and realize, do I have an idea where price is going or do I not? And if the answer is no, then rarely should you be taking a setup. If the answer is yes, maybe you should be a bit more risk on. Don't force anything, but if your setup presents itself, put some risk on it. If the higher time frame and the lower time frame match up and they're both in your favor, that is when you're going to get the best trades. If the lower time frame is good, but the high time frame is unclear, a lot of the times that's those trades where your draw on liquidity gets edged or your stop loss gets hunted and then it hits your take profit. Those are the times when the market does some fuck shit, and a lot of people, it just destroys their win rate because they don't know how to align the time frames. That's a big issue I had, but when I really started just doubling down on the days that it was very clear where price wanted to go, that is when I reached consistency. And the other thing too, like, I know I briefly went over this, but like, stop being so scared to just sit back and let the market do its thing. Think about it like this. Let's say you traded for a 2-week span, right? And then 1 week, let's just say, let's say this is a week's worth of time right here. This, I'll zoom in to make it easier. This box. This is a week's worth of price action right here, okay? I don't know if it actually is, but we're gonna say it is. Let's say you were offensive here, okay? And you trade continuations, you were offensive, you applied the same risk as you usually would, and because the high time frame is not very clear, let's say you took 3 trades, you got break even on one of them, and you lost the other 2, okay? Now it's a red week. So now you're going to the next week, and your P&L is already red. Now, the next week starts off here and ends somewhere, we'll say, just for the sake of the video, we'll say here. Okay, this is the next week. It was a short week, whatever. This is an example. But here, it's very clear that price is continuing higher. And you know, if you can get a bullish entry on the lower time frame that matches up with the bullish structure on the higher time frame, the win rate's gonna be a lot higher. And you go this week and you take 3 wins. You have a perfect week, 3 wins on the week, awesome. But the issue is, this week here, with those 2 losses, eats up most of your green P&L on this week here. So now you're only up a fraction of what you would have been up if you just avoided the bad setups. Trading is more about avoiding the bullshit rather than taking advantage of the good trades. Like a monkey, you could set a monkey in front of the screen. He could take advantage and see a dumb clear setup, take that trade and profit from it. But he could not avoid the trades that look like they're good, but in reality, the context isn't good, so the trade doesn't play out. You guys have to understand that it is so much more beneficial to sit back and not take a trade when conditions are not in your favor than it would be to take bad setups, take losses that chew away at your green P&L. Like, think about it like that. Anytime you press the button and it isn't clear as day with what price wants to do, you are just taking away from your yearly salary. If you're gonna treat trading like a business, you get paid a salary. So if you're gonna take dumb setups, you have to look at that from a different perspective and realize, this is not a good, smart business decision. Therefore, it's probably going to take away from my income. So therefore, I should probably stay the fuck out of the trade. And if you actually zoom out and go to the 1 hour, the 4 hour time frame, this is really easy to spot whether the conditions are gonna be in your favor or not. Like, we'll go to the 4 hour and I'll zoom out a little bit, and I see a time period like this. This is a time where I'd want to put some risk on. We're continuously making this move up. Up here, not as much. I have no idea where price wants to go. Then the 1 hour time frame. Here, this whole leg down. This is great. I know that price has bearish structure. We're respecting bearish gaps. We're clearly going lower. I know where price wants to go. Versus up here on this range, I have no idea. We're kind of just stuck moving sideways. I don't really want to put risk on because I know that even if the lower time frame looks good, the higher time frame's probably not going to align, so I'm not going to have as much conviction in that trade. Automatically, if you take a trade based on the 1 minute, the 5 minute time frame, and it doesn't align with the structure on the higher time frame, it takes away the probability from that trade playing out automatically. Like today, for example, for the draws, it was new week opening gap was here. Then we had this sell side level down here, this level, And that was about it. And the problem is here is with this range that we're in, I'm not expecting good, clean price action. I told my Discord this morning, I give my bias every morning, I said, high time frame is very unclear. We could go either direction, but I need to wait for price to give me clear confirmation in which direction we want to head. And ideally, I wanted to see new week opening gap get hit, but this morning, price, we shoot up immediately in the morning, and then we come right back down. Then we go right back up. Then we have this little retrace. There was a 5-minute gap here. A lot of people took this to the new week opening gap, and you would have gotten smoked. First of all, ES took the new week opening gap, but second of all, when you're trading chop like this and the high time frame is chop, you are just destined to get fried taking these types of trades. And then we had this big pump down and just did some bullshit the rest of the day, so I got off. A lot of you would be better off just sitting there waiting for one golden A+ setup that is just a 95% chance it hits, full porting the account, and then just scalping the winning days after that. I'm not joking. A lot of you would be better off like that because you can't avoid the shitty days. A lot of you would do much better that way. But if you want to make it in this game, longevity-wise, keyword longevity, no one-hit wonders. If you want to make it, you have to get good at recognizing these conditions and sitting out when the market is not in your favor. Understand, there are times when you should be risk on, and there's also times when you should be risk off. And I would argue that the times when you should be risk off are more important than the times when you should be risk on. Because when the market's clear, it's pretty easy to take advantage of the A+ setups. It's pretty easy to spot. What's more difficult is when a setup looks good, but the context behind the trade isn't good. That's difficult to avoid. That takes time, it takes experience, but with continuation trading, this is the #1 way to recognize that. Zooming out to the higher time frame, are we in a range? Are we not? Are we displacing? Do I know what's going on the higher time frame, and do I have a clear higher time frame draw on liquidity? If the answer is no, especially if you're a new trader, more times than not, you should be sitting out. More times than not, you should wake up, realize that you have no clue what the fuck's going on in the high time frame, and either go back to bed or do something else. Because more times than not, you will get cooked if you can't control yourself. And I know it can be difficult to sit there for days at a time or even a week and not press the button. I understand that. But me personally, I have not taken a trade the past week. Now, given last week, Monday was a bank holiday. The rest of the week, I was moving, I was doing other shit, but I still had the charts open, but nothing looked dumb clear to me. Nothing was dumb clear. If it was, I would have taken a trade, but I didn't see anything that I was comfortable putting risk on. So I stayed back. I stayed out of the market. And now, I've been in this game long enough to know these conditions do not last forever. People think bad conditions last forever. They don't. I know that I do not thrive in these conditions where the high time frame is ranging. I thrive in these conditions and these conditions when the market is clearly moving in one direction, continuously displacing in one direction, hence continuation trading. And I would way rather wait out these bad conditions, not take a bunch of losses. I would way rather do that so that way I have capital to apply risk when conditions are in my favor. Because a lot of you will just take bullshit setups, blow your accounts here, and then when the market looks like this, then you don't have any capital risk anymore. If you can just avoid the bad conditions and avoid the setups that don't have good context behind them, that right there is probably the difference between you being an unprofitable or break-even trader to being a consistently profitable trader. That alone. So this was just a super important topic that I needed to cover. A lot of people struggle with it, so I wanted to give my insight, hopefully help some of you guys out. I will be doing daily YouTube videos here for a while, so that should be sick. I'm in the new place, the vibes are high, and I'm in the mood to drop a lot of sauce. So if you're not subbed to the YouTube already, definitely go do that. I would appreciate it. But as always, I have the link to join my free Discord. That's in the description of this video. I post my bias every single morning. I review your guys' trades. Just overall, super awesome community to be a part of. But with that being said, I will see you guys tomorrow for the next video. Peace.